Hey, what's going on? It's Scott Taylor with San Diego Real Estate Hunter.com, licensed in the state of California for doing both real estate and mortgages with an emphasis on San Diego. Now, you're here because you fill out a form on my website, maybe about today's San Diego mortgage rates, maybe about San Diego Mortgage Finder, and that's what this educational video is all about. Now, this will be a Q&A. There's another video probably on this page or via email or via social media, wherever you're seeing this, that kind of broke down more of why I'm doing this versus just a rate. And kind of the different mortgages. So if you're looking for your mortgage rate, just like I said in the other video, go to bankrate.com. They'll tell you, here's what it is for 30-year, here's what it is for 5-year, here's a VA, here's this, here's that. And then you'll see an asterisk. And then it'll say, if your credit score is a 900, if you make $1 million a year, if your debt to income ratio is 10%, if you were blah, 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 and you're like, okay, so that's not really my rate then, so how do I figure this stuff out? That's what I'm here for, and that's what these educational videos are for. I think they're pretty good education. Unfortunately, you have to look at me and listen to me, so maybe you're like, I don't know if it's good. So what I would like to do is answer some kind of Q&A questions. I get a lot of emails, I get a lot of texts, I got a lot of questions, obviously, about real estate and about mortgages, and this is why I kind of wanted to break some down. I have a lot of questions, there's a lot in my head, and I kind of like to go off the cuff if you don't mind. I don't like to have a lot of notes, I don't like to have the teleprompter. So the first one is, hey Scott, with the down payment assistance stuff, and the first time home buyer stuff, and the closing cost assistance stuff, if it was actually true, if it had actually existed, how come I don't know about it? And my answer is, you do now because I know about it. So one of the misconceptions is that if you go to a bank or credit union, they have all the loan products available. They don't. They have what they want to offer, and a lot of banks or credit unions specialize in specific things. I don't know if any even do the first-time home buyer stuff, or closing cost assistance, or down payment assistance stuff. I really don't know. But I'll tell you that it does exist. There are things like a 5% silent second that turns, if you don't sell a refi in 3 years, that falls away. I can't say it's free, but you get it, you don't pay it back, and then it falls away and you never pay it back. That's pretty close to free for me. There's things like where you get 104% financing in the state of California. Not zip code specific. You can live wherever you want. There's things like the MCC tax credits where you can save up to 20% off your mortgage interest every single month. Claim it via tax time when you do your taxes. I promise you, those programs do exist. I deal with them all day, every day, and so does my team. There's things like a 1% down, 2% preferred lender equity boost, where you're buying a place at $400,000 and you put down $4,000, the lender will give you, no strings attached, $8,000 to buy the place. It does exist. There's a San Diego Housing Commission stuff. There's a Chenoa fund. There's a lot of different products. So simplified. It's who you work with. If you go to a bank or credit union, you deal with them. If you deal with me, I'm approved, my company is approved, my team is approved with a lot of different wholesale lenders in the state of California, and there's a lot of different programs. All right, Scott, maybe talk a little bit more about why there's so many different programs. Okay, so I know there's things like the VA and the FHA and the conventional and the USDA and the jumbo and the piggyback and a lot of different stuff. And to be honest with you, there's probably no real easy way to streamline it. But if you're a veteran, before or now, I would say pretty close, the VA loans are the best, right? So you would go VA. If you do VA purchase, you would do VA streamline refinance, you would stick VA, okay? If you want to buy in, I'll say the countryside or agriculture, like again in San Diego, in Fallbrook, even though that's not really, but Fallbrook or like Julian, Ramona, Campo, etc. I would probably say stick with USDA if you can, because you can buy as low as $0 down, and there's fantastic rates. Now then, we talked about the first-time home buyer, we've talked about VA, we talked about USDA. So now let's talk about for like a regular purchase. Hey, I'm just a regular person and I want to buy a home, okay? Then from there, the next low down would be something like conventional, where it can be as low as 3% down to get a conventional loan. If you're buying, you know, a condo in North Park for $400,000, or if you're buying a townhome in Forest Ranch for $425,000, if that exists, like you'd go that route, okay? You probably make a little bit more money. You might have a little bit debt to income ratio. You might have a little bit better credit score. Not always. If that doesn't work, then we'd probably go to something like an FHA, where you'd put down 3.5%. Their guidelines are a little looser, and we'd probably go that route. It's especially great if you want to go up to a little bit higher loan amount. So maybe you want to go up to that 649,750. I'd say probably FHA might be a little bit better because you would only have to put down 3.5%. And then if you got an FHA loan, you can do an FHA streamlined refinance to where we can do it no cost, no points, no fees, etc. And you can refi and go that route. Now, if you're going to a bigger loan amount, there's really only two different options. You kind of do the jumbo mortgage loan amount, which would probably be a minimum of plus or minus 10% down, or you might do something like a piggyback loan, where you could be 5 or 10% down, and it's a little structured different. You have your down payment, you have a first, and then you have a second. So that might be a better structure where we have better monthly payments, and or if we need to get closing costs covered. Okay. From there, you know, if you're doing construction loans, and I kind of talked about in my other video, if you're doing it on a purchase, like a regular purchase, I'm not talking about hard money stuff. I'm not talking about building stuff. I'm talking about if you want to buy a place and kind of fix it up, can you get loans for that? On a purchase, to be completely blunt, I like to be honest and direct as I can. It's a little hard, especially if you get permits, to deal with it in those time frames. Think about it. If you have a 30 or less escrow, do you really think that you can get the architect out there to do the architectural designs, and then the contractor out there to bid, and then the city permits and do all the city permits? You can't all do that in 30 days. With all due respect, everybody says that they can. You probably can't. So on a purchase, whether it was an FHA 203K or whether it was a home style renovation loan, it's probably pretty hard on the purchase, right? So I say, hey, buy the place, 3.5% down, 3% down, and then when you can get everything in line, then you can do that as the refi, and you can work those costs into your new loan. To me, that makes the most sense. And then, of course, if you wanted to get cash out, you could do a cash out refi on any loan, or rate term refi, or you can even do like a HELOC, right? So that would be something that you can do. So I don't want to answer any more questions a little bit longer than I wanted to on that, and I apologize. I just kind of wanted to direct you like, hey, there's really no such thing as today's rate. It depends on you and the loan and your debt to income ratios and your credit scores. And then I kind of want to just talk about a little bit better about the different loans and questions that people have regarding those loans, because we don't sometimes know, like, what do those things even mean and who are they good for? So you want to get started with me, and I appreciate it. How do we get started? We can go online to scottsloanapp.com. You'd fill that out in 20 minutes or less. Once you are done, I get a text or email alert. I'll pull your credit. I'll give you a call. I'll say, hey, based off your application, based off your credit score, based off your debts, we're good to go. Supply all your documents. So I would send you an email, things like driver's license and social security card and last 2 or 3 years tax returns or W-2s, last full month's paychecks, last 2 months of bank statements, all pages, if you have 401k, IRA, etc. And then depending on your credit report, maybe Chapter 7, Chapter 13, short sale foreclosures, etc. Once we have all that in, everything in, we'll look at it and say, hey, based off of what you provided, and I looked at the lenders, here's the programs that we're going to go with. You don't need to know that. I do. That's my job. Then we submit it, and then we're off to the races. So we try to be as fast as possible. If it's a purchase, you're probably doing it in 30 days or less. If it's a refi, we can do it as fast as basically we get the stuff from you, submit it, get it approved, and close escrow. So a lot of times it's 21 days or less. So that's it. Thanks for watching. Once again, go to Scott's Loan app to get started. I look forward to serving you soon.